Gold is at a critical fulcrum point. What happens next could redefine markets for months. Bulls see a breakout, bears see a disaster. Their decision is imminent. It's binary. Let's unpack exactly what's at stake. All right, so here's the gold chart. We can see here that we had this beautiful bull breakout back in April that saw us hit 3,500 on the upside. Since then, there was a breakout attempt that occurred here in the first weeks of May that now has done a direct double top retest of its previous highs, and we have seen over the last week a market correction on the downside. Now, is this going to be a bull resumption after a correction, or is there something bigger? Well, this is actually the fulcrum point of the move, which is when we take a Fibonacci of the entire prior rise, we can observe that the 61.8 retracement lies exactly at this 50-day moving average. This is a moment where traders typically buy dips. And so if this correction we saw over the last week and a half was a buy on dip, this is literally where the buy on dip traders should emerge. Now, this is the moment we're going to find out, do they show up? Because if we end up in any way seeing the distribution continue where we break down below these levels, then this is no longer just a retracement, but the beginning of a bigger and more pronounced correction. Now, before we go into any boogeyman scenarios of like a bear market in gold, it would be more similar to what we saw was multi-month corrections that happened both in 2024 between April and June, and another market correction that happened between October and December. Each one of them were about 3 months in length, and it was a consolidation period that gold went into after a bull advance. And so what would I envision that scenario if the bears end up prevailing and this 50-day moving average and fib zone does not hold? Well, then we're talking about a retracement on a weekly basis of the entire prior rise. You can see that the Fibonacci zones lie just below 3,000 on the downside. If we don't hold this level, we're talking about a correction that will probably last several months with vulnerabilities of retesting down there. Now, the good news for the bulls is that that would still leave the primary long-term bull market intact. It would just be one of these 2 to 3 month periods where mean reversion and unwinding overbought state of the market would occur that would lead to the base from which another bull advance could begin. But the point being here is that, is this going to be a multi-month correction, or is this just a pause before a re-resumption of the bull phase? It all gets decided right here and now. I'll keep all of you up to date in the week to come.